We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning, everybody. Welcome back to another live stream. I hope you're all doing well. And there is still blood in the streets when it comes to risk markets right now. Take a look at Bitcoin dropping 5% again today. The S&P 500 is lower. The NASDAQ is lower here. And of course, we cannot forget about silver and gold. And I can pat myself on the back. I did get that short yesterday that I talked about in the video. Ultimately decided to go short and took the trade off of the 4-hour time frame. We are still in it. And it was a pretty gnarly drop in the Asian session yesterday. I know this doesn't look like much because of this recent chaotic, mess that we had a couple days ago in silver. But yesterday, during the Asian session, we dropped at one point here 18%. Like something is going on with silver. Anyways, I took a small short position yesterday towards the middle of the New York session yesterday. And so far, we've got some nice follow through to the downside. What I did is I used, from a technical perspective, nothing fancy here. Basically looking left, we nailed this past support turned potential resistance level. And then once we started to see this little engulfing candle take place, this rejection candle and the 38.2% retracement level, all of that kind of coming together gave me the logical short setup. That's just the technical side. Let's see if Edgefinder still has the reading that it did yesterday. Yesterday, it did print a bearish reading for silver. So let's see if it still does. By the way, bearish reading on S&P 500 so far off to a decent start. And silver, yes. So we've still got the bearish reading within Edgefinder for silver. Technicals flipping bearish here recently, which I agreed with, as I just showed you on that 4-hour, right? 4-hour and daily chart trend seemingly losing that upward momentum. Yesterday in my video, I described it as, losing the invincibility aura trade. This is kind of nerdy history stuff, but it's kind of like Napoleon when he just like would not lose any battles, right? The Napoleon Bonaparte. He was a legendary, probably one of the best generals. I mean, definitely one of the best, most successful generals of history, right? And no one could beat him. Like he was invincible. No one ever beat him. He won and he won and he won. And the chances of you winning a battle against Napoleon were so bad. Well, I think that's kind of what felt like trying to go short precious metals for the last few months, right? Precious metals just have this never-ending melt up sort of environment. Well, recently, the invincibility aura kind of cracked, and we had this massive fall in precious metals. And actually, shout out to Alan. I don't know if Alan is in the chat just yet. I think he might be coming on the stream today. But Alan dropped something in our Discord chat that was exactly on par with what we discussed in yesterday's video. It's this chart right here. So following a 20% plus correction from an all-time high, silver's forward-looking returns typically not particularly great. And so I'm kind of thinking that that's what we're seeing taking place in the precious metals. And what usually caused, historically speaking, what would cause this great change in precious metals trajectory? Usually some sort of massive catalyst, oftentimes taking place around the Fed. And so is the market sniffing out that this Kevin Warsh guy, yeah, he might be dovish, but he's not the ultra dove that's just going to cut interest rates a million times that the precious metals had rallied upon in months prior. So anyways, I thought that was that's not the only reason I took the trade. Obviously, I'm very systematic in what I do. So Edgefinder giving a bearish reading, technicals on the 4-hour time frame lined up, small short, took the trade. I went short SLV, which is the ETF that I trade here as a US trader. And so far off to a decent little start. We had this bit of a counter trend fade coming in, and then now you can see we flushed lower during that Asian session last night, and now gapping down into the open. So is this just going to flood through the lows? We'll see. I mean, to me, it makes a lot of sense that this leg lower has room to continue. Now, let me not try and scare anyone. If you're a precious metals like long-term person, then hey, me too. I like precious metals for the long term. And I feel like I have to say this because the mere mention of being bearish on precious metals, to many who have watched me for a while, who are, lovers of precious metals, investors in them, etc., they'll hear this as like some sort of betrayal. Oh my gosh, Nick, you went short on precious metals, you went short on silver. And look, it's not. Trading is trading. I have a defined risk on this trade. If this thing rips through the highs, if we have some massive rebound today and silver breaks out, I'm out. Trade's gone. But right now, I'm a trader. So when it comes to trading, new information, changes in the data, changes in the technical price action, I have to acknowledge that. And again, we had this invincible run up that seems to have cracked. The rebound came in after the deleveraging. I think you had fresh sellers want to step back in and take it lower. And so that's why I took that trade. How could you do this to silver? I didn't do anything. I'm too small. My trade and my influence do nothing in the grand scheme of how much volume goes through the markets. However, I did think that the rebound had the potential to roll over and continue lower. And I still do. So I think that this trade, look, I have no realized gain on this. So if this thing snaps all the way back up today, then I'll take a loss on it. It is what it is. But what I'm shooting for, what I think could happen for silver is, I've said this the other day, I think a run on the moving averages is a perfectly plausible, healthy correction and still being bullish long term. So you might say, Nick, does this mean that you are thinking that precious metals are worthless? I'm not joining the other extreme that says it's just a rock, it yields nothing, it's worthless, there's nothing. I am a firm believer that having precious metals in a portfolio adds something there. Not to mention the track records of these things over very long stretches of time is phenomenal. But I think that the track record of, as we just saw from that image I just shared, buying the highs on precious metals can lead you to some devastating and very painful drawdowns. So look, I think that precious metals have room to follow through to the downside in the short run. And then, hey, if we get a move back down to 50, I'll probably start buying it for the long term, depending on what the macro looks like at that time. But yes, right now, silver has continued to get a bearish reading within Edgefinder. And we also have some interesting stuff taking place on the indices. NASDAQ is showing some signs of a desire to move back down into the 200-day moving average at this point. You have just broken the stack of moving averages around 20, 50, and 100. That's a big deal. NASDAQ has been consolidating for a few months, and this cluster of moving averages has acted as some kind of a dynamic level of support throughout this process. As you break this 100-day moving average yesterday and into today, you're getting some follow through. Where I would take us next from a price action perspective, like, we're going to remove the moving averages, but take a mental note. This is where the 200-day is. It's at the low end of this range. I still think that from a price action perspective, you do not have the clear higher low, higher high sequence that we had for much of 2025. And so I think that the NASDAQ long term, again, still bullish. Nothing Nothing has shaken me to the point where I'm like, oh yeah, sell all stocks. It's all going, to zero. I'm not in that camp. But a breakthrough this low, naturally, the price action trader in me says, yeah, we could very well see 24,000. And by the way, that's not even that, disastrous of a pullback. That's an 8 to 9% pullback. Very healthy. In fact, I hope that happens as a longer term bullish stock market investor. I've said this many times. I'm not the only one who says this. Pretty much all, financial long-term investor type people will say this. If you are under 50 years old or 60 years old, no shade to my 50 plus friends in the audience, but if you're under 50, if you're under 60 years old, every time the stock market drops, it favors you disproportionately if you have a long-term view of the stock market. Like, understand this. If you are trading options, if you are making big bets in the short run of where you want the market to go, then this part isn't for you. But if you're somebody who's like, yeah, I dollar cost average, or I buy individual stocks that I like, or I trade a long-term swing trading position, whatever you do, right? If you're long-term natured, the more the stock market drops, the better it is for you. You get to pick up shares at prices that are lower, right? Knowing that very likely you give that enough time, 10, 15, 20 years, you're going to do really well, most likely. Fun fact, Americans love Napoleon, but Europeans hate him. Can confirm, I think Napoleon is awesome. Nick, any discounts for your VIP group? Yeah, Jonathan, if you have any questions about the VIP group, if you want current discounts, we are running some pretty steep ones right now. Send us a message on our live stream chat or live chat. If you want to speak directly to a member of our team, we'll drop that link here in the live stream chat. But yes, if you reach out to them, they'll set you up with discounts. You can get access to my trades, Chris Pulver's trades, etc. All of it is on sale right now. So yeah, join us in the Discord. We'd love to have you in there. But yes, every trade, all of our conversations, like if you are trading, even if you are like profitable and don't have any need to necessarily learn new strategies, you should still join the group. We have some incredible conversations in here and some wonderful experienced traders from around the world discussing stuff. So join for the community. And if you're looking to learn, if you're looking to improve, if you're not quite where you're wanting to be with your trades, then you can also see the trades being taken in full details, context, why every trade's taken. I took the silver trade yesterday. I explained why, here's the reason why. A lot of people have been asking me, Nick, why'd you suddenly turn bearish on precious metals? Well, first, the edge finder flipped bearish. That gave me a warning sign. And then I looked into it, or not really looked into it. I combined everything together. And I said, I'm shorting silver after a retest of the 38.2% retracement plus that resistance zone. I already showed you guys that on the technical side of things. But then I also said that a less dovish than expected Fed share, Kevin Warsh, inflation data coming in higher than anticipated, PPI last Friday, and the 2 and 10-year yield rising are troublesome for me. Those are all things that make me more dollar bullish and silver bearish and gold bearish. Jobs data showing weakness in the U.S. ADP numbers came in weaker than expected this morning. That's more positive for silver. But then we also had PMI data that came in really strong this week, both on the services and manufacturing for the U.S. economy. So those are strong dollar cases. Edgefinder already mentioned bearish reading. Broken momentum, now flipped bearish, and I put a small risk on with a stop above structure. So, that's the plan. And I had this whole rant yesterday in the community and on my socials, my Twitter, and all this stuff about how sometimes people will say, "Well, should I join the move now, or is it too late to short silver, or is it too, should I take my profits?" And I just want to say this, like, I'm not trying to sound like a know-it-all or anything like that, but like, honestly, my genuine response to that question, if you ask me, what should I do with my position? Should I short here? If you ask me that, genuinely, my honest response is you should do what your back-tested strategy tells you to do. If there is any question in the moment of what you should do with your trades, you're doing it wrong. If you don't have a plan and a rule set to know what you're supposed to be doing at any given time, you are doomed for failure. If you're sitting here on the stream today and you're like, I don't know, man, should I just go long silver today? Should I, short gold this morning? Like, if you're sitting around wondering, you're failing to prepare and preparing to fail, right? So don't do that. Anyways, we did have unemployment claims come out here just a second ago. We're going to bring in Chris Pulver to the conversation, see what he's got for us. Let's see what we had in terms of U.S. things on this. Anyways, 231K compared to 212, so a little bit higher than expected unemployment claims. We'll see what that brings for us here. Hey, Chris, what's up, man?
Happy Thursday.
Happy Thursday. Some chaos today. What's going on?
Yeah, I think that the VIX is really what I'm paying attention to. We've got a VIX at 20.71, and today's kind of a make or break type day. We've had some decent intraday VIX rallies. Yesterday being one of them. I mean, we flared up to 21, dropped back down to 18. If we break new highs, we kind of run into the let's say 22, 23. I'm prepared for a bit more of a vol spike into maybe 25 to 30. That might be time to take off that synthetic long, or maybe see if we get a bigger flush. We're still hanging in there, but I mean, Google earnings wasn't enough to kind of save things last night. I thought having solid earnings, $400 billion, a lot, like it was solid earnings, just like a lot of the Mag 7s were. But the pattern prevails. This kind of rising wedge look. I mean, I think it is just a deleveraging, Nick. So I mean, if you look across the board right now is a good time to consider that volatility is rising. Stocks are likely going to continue to deleverage. Last time we saw a massive deleveraging, and I'm not going to count 2025's like single day sell-offs. I'm going to count like 2022 as a deleveraging. That was not the easiest environment to trade. So I am prepared for probably a flush into 6,500 S&P, possibly 6,200, 6,100, this previous all-time high. I want to see where the bulls kind of step in from those levels. I think those are good spots to be. Either one, selling premium way down here, which you'll see this for me, like my pulver alerts, I'll probably take on some SPY and Qs way down here at these lows. And if I just want to take a position off of a bounce, some debit spreads or something like that could help me give me some income. But insiders are selling, VIX is up. If you look left on a lot of charts, try to find some discounts. It's a rotation. I mean, money's not just like leaving; it's just rotating. But it is deleveraging in tech, deleveraging in software. It's pretty apparent, and we're getting some pretty ugly moves, and it's dragging a lot of things with it.
Yeah, it's an interesting dynamic because again, you have some aspects of the S&P 500 holding up okay. I mean, this chart, does not. There's a lot more pain going on in the software trade, as you mentioned,
right?
Than what's going on in the S&P 500. S&P 500 just looks like it, kind of chopping around, not doing too much. RSP, I think, actually even looks better. Yeah, RSP sitting at the highs. I mean, this is an interesting shift because when we take a look at IGV, which we've talked about a lot on the channel here recently, just take a look at software stocks. They are getting hammered here continuously with just a straight shot down. And you gotta think, I mean, this is some of the most, historically speaking, some of the most loved aspects of the market. I've heard a lot of people throwing around the phrase re-rating on software stocks, talking about the valuations need to come down to justify the potential risks of AI disruption. Of course, NVIDIA CEO Jensen Huang yesterday came out and he basically called this move ridiculous, which is of course exactly what he's going to say. But he sort of came out and said this move is ridiculous, that AI is going to use and leverage software, not replace it. Which I thought was an interesting take. You can kind of see what he's saying. He's basically saying that like all this AI stuff is going to leverage the existing tools that have been built by software companies.
Right.
Specifically, the thing that he said, I'm blanking on the word. He said, why would we remake the screwdriver when we have a screwdriver right here? That's like basically the concept of, all these application softwares.
Sure.
He's like, why would we remake the existing stuff that's already so good? I don't know. I think there is some genuine reasons to be a little bit concerned about valuations anyways. And this just triggered a little bit of that coming into the market. So, yeah, we'll see where it goes. But NASDAQ threatening to potentially take out this major level of support that it has been finding the last few weeks. Chris, I think, I said this morning, I think a move back down to the October and December lows is perfectly within the realm of reason. That is a minus 8% pullback on the NASDAQ. Very normal.
Yeah. I hope this isn't the pattern, but if we have a double top, there's your high. It's a really good double top. So, if we break back down to that November, December low and we double that, then you're talking NASDAQ down here, which I'm just saying for the overshoot, that's typically what can happen is the overshoot becomes kind of self-fulfilling. If I measure this move, so high, low, let's say we do break that low and we double that move, then that projects us down to about 525. This is Q's previous all-time high at 540. So I could see us overshooting a little bit, but this would be a good spot to maintain structure. These topping patterns especially can fail a lot in the stock market. I think for the fact that we've had a bull market and we keep seeing this resiliency and the economy's not as bad as I don't know, but if we drop here, that's a good spot to take a test. If you're wrong, stop out quickly. Otherwise, project it down here, and then I think this is a great spot to be buying back in. That's a pretty healthy dip. If we're down 15% Nasdaq, 10 to 12% S&P. That's a pretty healthy dip. I do like positioning for it. It's just, I think the crappy part, Nick, is how much money is lost. It's not like it's leaving the markets, but like we're talking trillions of dollars get wiped out anytime we're seeing like 5 to 10% corrections in the market. It's really, really damaging. It wasn't that long ago where it's like, hundreds of billions were wiped out. It's like, I think Liberation Day last year, there's like $11 trillion in market cap wiped away in 2 months, so it's just a lot of money, man. That's what happens when the market is so big.
Chris, this move, speaking of money lost real quick, that move in precious metals. We talked about it yesterday. I did end up pulling the trigger on a small short position on silver. And, I have to kind of defend my case because, you and I have been pretty bullish long-term on precious metals for long-term, and I still am. But this technical pattern that's set up here, you had just a real smooth, big drop, and then the retracement back into this area. Decided to get short with a stop above, and not the biggest trade in the world for me, but still a decent position. And we flushed lower into the Asian session. My thought process on this, Chris, I wanted to share this chart. Here's our chart of the day that I can pull up here. I talked about it just before you got here, but I'll pull it up again. So let's see, where is this? Here it is. So Alan from our team found this chart. I thought it was really interesting. This is silver following a 20+% correction from an all-time high. And it just shows that in the rare instances, there's not that many of them, when you have that kind of really quick succession fall, typically there is follow through to the downside. And a lot of times, historically speaking, silver making these kinds of run up moves is very euphoric, crowd driven, all of a sudden rushing to silver type of moves. And we have seen time and time again that actually kind of converts later into more of a downward pressure for a little while after that. So I think that this precious metals move could cool off for a little while. And by the way, that's kind of the ideal situation if you actually are a precious metals bull for the long term. You want to see this move roll over here and take a break and gold to come back down and give you a chance to actually start loading the boat and building a position again, rather than dealing up with this very frustrating melt up move that a lot of traders hated, right? That's a really frustrating, if you're a practical waiting for dips type of trader, this move just feels, painful to watch.
Yep. And can't say we didn't warn you. So
Right.
this volatility, I mean, it's a bit of a fever pitch on gold and silver, that blow off type move. And it's funny, man. I was so close to just like, all right, I'm just gonna throw a little bit in at the top, and I'm glad I didn't. So I'm and now the flip side of that is like I'm just not in a hurry to get a big position. It's like this is gonna shake out. I mean, I'd love to see silver, have a little bit of follow through if we go high, low, lower, high, lower, low. Let me just drag a little fib in here. So 4-hour swing. So high to low. If we get some follow through, maybe down to about $60, maybe $55. And then again, I'd say I want to start there, not necessarily like that's the bottom. I'm not calling the bottom. I mean, just as difficult it was to call the top for months, don't call the top. Bottom, it's like, well, if I want to invest here, like where else would I invest? I mean, 50 was the all-time high.
Right.
So, I mean, ideally, it's like anything off of 50 is pretty decent. And just understand that we could have a much bigger pullback. It could be a 70, 80% correction. So, I mean, it was a great run. It's over quickly. I keep going back to this. This is ultimately where I'm willing to say, okay, the gold and silver stuff is kind of calmed down. We have to hit the 200-day moving average on gold. Once we do that, I'm kind of satisfied. I feel like this run can be stabilized and neutral, and now I'm ready to start rebuilding. But that is still a long ways down on gold, which means I think silver follows through. I don't think we're going to have, gold drop another current price down to this 200-day moving average is still another 18% lower. That'd be a 30% correction from the highs. I mean, if we have that on gold, silver is going to follow, probably be double the volatility.
Yeah, I was going to say silver, you're looking at like another 30+% to get to the 200-day moving average. So yeah, I mean, that's how I feel too. I feel like, I said that earlier. I think that we could be retesting the stack right now of all the moving averages, right? You could just be seeing this flush to the downside here. My plan is, just to do what I always do with these sort of momentum trades. I've got a tight stop. I'm going to try and trail it. If we can break through those lows, I'm going to trail something further on it and just see what I can get with it. But yeah, I mean, I think that as fast as it can run up, we know commodities very well can also do the same. And also to your point about, starting a position, I'm completely with you. Like there's no rush when you are building a position in precious metals. Look, if you are talking about like only ever trading precious metals, if you've only been trading for 2 years or less, like you only probably have seen or traded in an environment in which precious metals have floated up. But there are many, many years where, and I say many, like that's an understatement, a lot of years where precious metals do a whole lot of nothing and waiting around. And so, it feels like I got to get in, I got to, be part of this. Really, the long term, if you are kind of going back off of history for precious metals, then there's a good chance the top could be in for a little while and that we could see more prolonged consolidation for, believe it or not, it could be years. Like you could have a couple years of consolidation. That sounds crazy, but that's commodities 101. They go insane and then they go nowhere.
Yeah, it just has to be a percentage allocation. Same thing with the international stuff. I mean, I think international is a pretty good play this year. I also think overall, like right now, maybe it's not great to be overweight equities. I mean, the one thing that happens is there's not really a safe place to hide. I mean, we have the energy sector is up and this is encouraging, but if things really roll over, this is going to get trimmed, right out of the gates. And this is what 2022 was like. The markets were up in energy a ton. I mean, I had like a huge bump in my portfolio 2022 trading inflation and it all gave it back. Like we had a good run from like, I don't know, January to April. And then by that time it caught up and, energy got the cold as well, and everything was down deleveraging with the top that happened back in January 2022. So I'm hoping that's not this market. I'm hoping this is just a little bit of a flush and correction. But I think the potential scare is like a little 5% correction is not really how this market operates. If we're going to have a correction, it's probably going to be 10, 15, 20%. So yeah, we've talked about having cash at the ready and dry powder. Look left on your chart. Things go on sale. I would say just be picky, on what you're choosing. If you're buying anything, I'm hoping it's, a solid fundamental company with upside targets, or it's an index where, it's going to be a lot more stable and a lot less volatile because you talk about stocks that ran. I mean, look at anything, the AI craze in 2025, look at the quantum computing stuff, the crash and burns that we've seen. that you look like you look on your charts, you're going to see a lot of these big moves where this was the dip in 2025 all the way up here to crazy highs. And I don't want to catch that. You know, like AMD is a good example. AMD has kind of a topping pattern. I mean, this is in the beloved space, but it's like we are making higher lows and higher highs, but this is the type of trade I'm taking. I want to stay out of the way. If I'm going to own AMD, I'm going to own it at like, I don't know, $50, $45. I mean, I know that it seems crazy. It's like, Chris, it's $200. I like it at, 180. Well, I do too. But in case it comes back to 100, I don't want to own it at 180. I don't want to own it at 200. It's like, just let me stay out of the way. So what I'm experiencing right now in my portfolio is because the VIX is up and there's all these, option pricings that are happening. I mean, I'm experiencing a lot of like unrealized volatility because I have, some ratio spreads and naked puts, and that's my exposure. But I'm like 50% lower than current prices. So we'd have to have insane drawdowns, which yes, it's possible, but is it probable? No. So, I mean, my trade should be fine. It's just, I have to kind of get through whatever this, this consistent flare up is in the volatility index. Looking in, let's go VIX again right here on the bigger chart. And it wasn't that long ago, flaring up to like 28, 29. It's like, we'll feel that a little bit.
Yeah, totally agree. And so just to clarify for maybe listeners who are new, Chris, you do a lot of options selling for premium. That's a very oversimplified kind of what you do, but you also, at least from what I know, and this has served you really well recently, you sell a lot of really low delta stuff in this market. You're kind of playing the far out of the money, kind of playing it safe, which keeps you cash heavy, which keeps you on the sidelines waiting for better opportunities. And just to show you a couple of charts, or not you, but the audience, a couple of charts here to follow up on that concept about like AMD, for example. What looks so good today can have just disastrous monster moves to the downside. So for example, Hood, this is a stock that I like. I actually let go of my shares. I can't remember exactly where, but I did pretty well in it. I missed some of the upside, but I did pretty well. I bought Hood back in the April sell-off, and it looks like I might actually get a chance to buy back into my shares. But this was a darling stock. People would not stop talking about how this is just an impervious, perfect, amazing company. And again, I like the company, but look at this. It's down 50%. And then take a look at MSTR. This thing has gotten destroyed. These are the sort of names that when people, when the market looks really good, these things are, obvious buys to people, or that seems like the first thing you should be buying because they are, just rock star, amazing performing looking charts. And it just goes to show, like, here's Spotify. You have a lot of growth stuff. We've had this rotation. And again, by the time the indices actually turn lower, growth stocks usually in a down market have already topped and are feeling the pain. So just run through a couple growth stocks with me here. Here's Palantir, right? The beloved, crown jewel of the AI rally, down 35%. Robinhood, again, all this speculation mania has been really good for their business model, yet now it's down 50%. Coinbase, don't even get me started. This thing has gotten nailed, 64%. Broadcom, one of the top dogs, down 24%. ANET, you have Spotify, again, another, popular tech company. Spotify down 43%. Oracle has been a disaster, an absolute disaster, 58%. Tesla, holding up okay. NVIDIA holding up decently well, but still down 18%.
Right.
The point that I'm getting at here with this is when we take a look at the index, still kind of towards the highs, it just goes to show that, you can pick your spots a little bit better than just chasing whatever is shiny in the moment. We're seeing the S&P 500 down 2% from the highs. Meanwhile, a lot of the exciting names that people get all hyped up about down 40, 50%. And to your point earlier about 2022, you remember as well as I do, Chris, the same list of names that I just talked about, they weren't down 40. They were down like 70 to 90.
Yep. And, you just have to look at the big picture. I mean, right now, like this is a time where even though I'm always wanting to trade, I'm always looking to trade, but it's, especially when you have options, you have options exposure. Like you mentioned your first one. We'll just take a really popular one, right? How many of us still want to own NVIDIA? maybe everybody. If we go high, low, lower, high, lower, low in NVIDIA, okay, but how do I trade that? Right? Either wait for this area around 150, or I set up a trade where, maybe I can put in something where I can own shares of NVIDIA at 150. Now, what I'm doing is I'm playing it even more cautious, and I'm saying, you know what? Because we have this higher volatility in this individual asset, in the indexes, in the VIX, I'm going to go 100, and I'm going to stay the heck out of the way. I'm going to use this 2025 low, and maybe I'll go out 6 months. Maybe I'll go out 12 months. The probability of NVIDIA staying down below $100 is pretty slim. Now, like you said, with that 2022 pullback, I mean, some darling stocks were down 50, 60, 70+%. Now, what would NVIDIA be if we went down to $100? It'd be down over 50%. If we came down to the 2025 low, we'd be down 60%. I mean, I think NVIDIA has had a head start. It's still a huge company, but I mean, we were 5 trillion, right? And now we're 4.23. If we drop to 150 or 120, it's like that market cap gets shed. I will be watching too. Let's track the kind of price to earnings across the board. I mean, we're at 25 times earnings S&P. If it compresses to 22, 21, or 20, is that enough of a discount for the market to say, okay, we'll go back in? I mean, I don't think that earnings have been terrible, but I mean, perhaps the market is like, deleverage, and it's a rough environment. I mean, there's no good way to just survive a decent bear turn. Like a 10, 15, 20% is always going to be painful. Always. I mean, unless you are stacking up short positions. Like today, I mean, I'm kind of tempted today when the market opens. I will go out probably, to a 15, 20 delta this morning and see if I can stack up some bear call spreads. But even this is a gamma reading chart. I mean, we're negative gamma below 69.20, but it still could get up to like a squeeze today. So, I mean, if I'm selling premium, I want to be selling above 69.55. If I'm selling premium on puts, I want to be probably safely below 6,800. I try to get out of the way. Like VIX is a big deal. And right now we're breaking some fresh highs here, Nick, this morning. And this is before opening bell. So if we don't have vol suppression, if the VIX does not get smashed lower today, we are going to see like more pain, more red. And it's okay. It's just, this is not the time to be brave. It's like, if you're going to trade a little bit smaller, look left on your charts, find some good stocks, do some screeners, like run some screeners, find some good scans, and find some quality companies you're like, I own it. If you want to go pure defensive, buy Coca-Cola. It's $70. You can get a 2.5%, 3% dividend. It's probably not going to go anywhere outside of like maybe a plus or minus 5 or 10% move. So you can kind of weather the storm if you want to hide out in something defensive, or just hold energy. I think that's I'm curious, man, if we have energy stocks up like 40, 50% this year, well, there's a good way to offset kind of the deleveraging that might happen in the tech space a little bit right now.
Yeah, that was definitely the story of 2022. Was energy was the popular place to be for sure, and then it kind of took a break, but you were in there, taking advantage of while it was hot, which is awesome. Just a little bit of an update here this morning for those who are just tuning in. We did have unemployment claims come in this morning, worse than expected, and we do actually see a response to that in the form of yields moving lower. Take a look at your 2-year yield moving lower down to 3.5%. The 10-year yield down to 4.23%. 20-year, 30-year, pretty much the whole curve moving lower in terms of yields in response to this. So bonds having just a little bit of a pop here this morning in response to what the market seems to see as some weakness in the labor data. And it's an interesting balance, right, Chris? Because when it comes to the labor market, it's like they want it to be weak, but not so weak that it causes concerns, right? Weak enough to get rate cuts, right, not weak enough to hurt demand. And at least the reaction here this morning, acceleration on VIX moving higher, stocks moving lower, yields moving higher, sort of coincides with maybe a little bit of concern that labor market continuing to cool. And maybe the question that arises also is, what about this Kevin Warsh guy? Is he actually going to cut interest rates, or is he going to step in and take a cautious tone? Yes, he is, an ally to the White House, but he also still is a Fed person, right? He's been in there since for quite a long time. His previous comments on not being in favor of QE, being concerned about inflation risks. I think that I made the whole point in my recent videos and content that I think that it was sort of a Scott Bessent play to relieve the bond market. Had you seen a really ultra dovish person get put in there that was going to be perceived as a complete Trump puppet, the market would have freaked out. And I think Scott Bessent, he's a hedge fund dude. He knows you don't want that. The bond market revolting gets ugly quick.
Sure. And Warsh has a history too. I mean, he knows Bessent. I think Scott Warsh's father or someone in his family had a relationship between Bessent, Druckenmiller, even Trump is tied to that with some type of family relationship. I mean, it's fine. I mean, Powell's still in play. Like Powell, even though he's kind of a lame duck Fed chair right now, I mean, nothing's really going to happen until after Powell. So, I warned that, the weakness window is typically February, March, April. We've seen a lot of corrections the last couple of years, right? 2022, it all topped out in January, started to roll over hard. Last year, February, March, April, COVID, February, March, April. It tends to be like a good little window for the market to kind of just cleanse. So if we get it out of the way, this also is a better way to kind of fix and repair and kind of ramp things up going into the end of the year. So, I mean, I know this seems crazy. This literally February 5th, and I'm talking about let's see if we can get a move into the end of the year. But if you think about the stock market going down first, let's say the market starts off, stalling here. I don't know about you, Nick. I wasn't celebrating all-time highs when it's like a 0.2% bump higher. It wasn't really that exciting. So if we get this type of flush first, like high to low, and we bounce from here, okay, fine. High to low, lower high to lower low. If we bounce again, I mean, I think that this type of correction, if we have something similar, it's going to suck. But if we can bottom out and get a V bottom from here, you're talking months and months of gains ahead. I would definitely love to be on board that train if we get it.
Well, and the thing is, as much as it's painful to see that drop and it doesn't feel good in your portfolio and it looks ugly, if you hold cryptos, it's disastrous. All that stuff feels terrible. I would way rather be taking a stab at longs for a hold period that's not necessarily a short-term trade but longer term move. I'd way rather be taking that stab down here than trying to play with it up here. I just think that the risk reward on stocks, there's mountains of evidence on this, at least looking historically. You get the big drop, the forward-looking returns are better on average. They are a better risk-adjusted returns basis wise good move. So hey, I think I'm with you on that. No one's going to like it in the short run. It never feels good when stocks are dropping unless you are short. But even then, it's such a fickle trade to try and short the market that it's, even if you catch it on the short side, a lot of times you let go of it too soon, or you try and hold it too long and it rips in your face, right? So it's just a hard trade. Drops never really feel good. And we also have drops, as we said earlier, disproportionate across the matrix here of markets. I mean, look at crypto. Crypto is having a really painful, year and a half. And this is just a little bit of an update. This is wiping out all of the gains since Trump won the election, right? So post-election win,
a pro-crypto administration. It's like, well,
yeah.
I look, talk about deleveraging. That's probably the biggest thing with Bitcoin is it became financialized, it became securitized. You throw leverage into it where people are like, oh, I'll just, add debt. And if it becomes a point where I have to sell my Bitcoin to cover my debt, I mean, MicroStrategy, unfortunately, for as smart as it seemed for the engineering that Michael Saylor was doing, you're adding a debt element to it and everyone jumped on board to do the same thing. And I think that's kind of the bad apple stuff that needs to come out of the markets a little bit. It's not fun. But I mean, anybody that's been in Bitcoin for over a couple of years has dealt with decent drawdowns. I want to point out one thing here, Nick, on that chart. So my S&P, if we do get that flush, all I did is connect the dots here from here's 2022's bear market low. I guess I could argue I could make a case for this 2020 low. That's probably not a bad trend line to use either. So something along these lines, like we've connected dots, 4 times here. So somewhere in that area, I know it's not perfect, but close enough. The market could be down 15 to 20%. But what's nice is if you are going to survive and participate here, this market could essentially return 0% for the year, and you have an index that could give you 20+% if we can get some type of timing play. So what I would do, and you'll see this in my alerts, I mean, let's say that we get a flush down to 6150, or we get a flush down to like even 57, 5600. I'm going to stack up probably 6 to 12 months of option trades that just pay me every month. Right? Like if let's say this happens and this is an April correction. Well, I'm going to go probably October, November, December, January, 4 months stacked up, thinking that the market, believing the market can head back up to these highs. I could go out further, but I think that's kind of my timeline is once we get through this midterms, even if we're reflexively back up here, it's like, just make sure we hang on to those gains. But point is, I mean, positioning for, let's say every one of those trades was, half of 1%. And I stack up, I don't know, 10 of them, 15 of them, 20 of them, whatever it's worth. It's like, I could see, 100+% gains on all those little positions that pay me, maybe close to like 10, 15, 20%. So for every dollar amount, like that'd be pretty solid. I don't know. This is what I'm looking at as far as just picking trades. There's ways to wait. There's ways to time this. And looking left, it's like, that's a pretty strong trend line. And of course, I mean, does anything good happen, Nick, if we broke this? If we were here and we break it, I have major concerns about the market at that point.
Yeah,
so I mean, we have to stay higher lows. If we don't, then we're talking like, okay, we're gonna have a conversation about the fourth turning, and maybe this is a massive topping pattern.
Yeah,
now we're talking valuation back down to 17. Yeah, it's gonna be rough. Lost decade, as you said. Yeah.
Yeah, like that. Yep. That starts to bring that conversation back in.
Yep.
We'll see. I mean, I wouldn't say I'm with you on that. You get those types of moves. I'm looking to try and take advantage, look at some buys on stuff. And if something changes, of course, we adjust from there. Chris, we're out of time here. As always, thank you for coming on and joining us here, and we'll see you on the next one.
All right. See you tomorrow.
See you, man.
Bye.
Yeah, guys, also just real quick, if you are, I just wanted to follow up with what Chris said earlier about, this seasonal time of February, March. This period of time in the last 10 years, we're looking at the S&P 500's average monthly return, and you can see that February is negative and March is about flat. I just thought that was worth mentioning because, coming into the last few weeks, we've been talking about how, maybe you have all this midterm election drama, you have this uncertainty, you have a choppy market here. If a correction or a pullback were to take place in markets, I think it would be rather sooner than later. We are seeing that follow through here for now. Let's see if we can break through some levels. If you're going to see a larger scale pullback in this market, the two spots that I see right now are going to be this current area of support around 24,800 and support around that 24,000 level. If you start breaking these areas, then perhaps we have further pain in the short run. And as Chris said, never feels good in the short run, but maybe that produces some longer term buy the dip opportunities. And again, that could also lead to some very steep drop-offs in risk assets like Bitcoin, etc. So they've already seen a lot of pain. We'll see if it keeps going. Silver looks good. I'm going to stay short on this one, and I'm going to trail a stop inside a VIP group. If you're not in the VIP group and you would like to join us, we'll drop a link here in the chat to where you can speak directly to a member of our support staff about setting up a membership today. You can get access to the trade alerts being shared by myself, Chris Pulver. We share all the trades that we're taking in the VIP Discord room. If that's something you're interested in, send us a direct message using the link in the chat right now. Up next, we've got Miko Audu taking over the stream to talk some technical trade setups now. Stay tuned and check them out. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
What is up, people? Welcome back to another stream. Hope everyone is doing good. Happy to be back. As always, we'll go through a bunch of markets. I'll share my opinions. what I'm looking at, what I was planning to trade this week, and how that is going. And of course, if you do have any markets you want to share, want my opinion on, of course, leave it in the chat and we can definitely take a look. But I had two main interests this week, NAS 100 and pound USD. Unfortunately for NAS, we are not doing what I was looking for price to do. So I haven't managed to enter any positions. And actually with this momentum and with price breaking some key lows, which I did want to see break this week, I'm going to have to step back from that bias I've had for the past maybe couple of months now. The reason why I have liked NAS 100 for the past maybe couple of months is because it's been a while since we came back to test the highs. We did do that last week, and I was in a position back over here. I did get trailed out around 25.8, something like that. So the plan coming into this week was, okay, price rejected the highs there. We still haven't made new highs. As long as we maintain the higher lows, I'm going to keep looking to buy the dips with the expectation of price eventually creating new highs, similar to what the S&P and US 30 has done. So that was the plan for NASDAQ coming into this week. And we started off pretty bearish and we were trading back into this territory. So this was the plan. If we can hold this level, I'm looking for a buy. I know we're not kind of strongly bullish. I know we're not really in like a very strong bull cycle. The market is quite corrective. A lot of the indices are quite corrective. So the plan was just keep looking to buy the dips and potentially take profits at the highs and see how far we could go from there. But of course, we have since then broken through that low, and that really does put an end to that bullish bias for now, because we could still see some upside. But am I as keen to buy it now? No, not really, because the whole point was that we were maintaining higher lows. Buyers were still stepping in, and we were still seeing those higher lows maintained. The fact that we're not seeing higher lows maintained anymore means structurally we are different. So we could even see more downside potentially to this low. I know, of course, S&P and US 30 not really looking that healthy either. Consistent failures at the highs there. I mean, they're still moderately bullish, but the fact that we haven't taken out a high since the start of Jan, and we just kept rejecting that same level, that's not really such a great insight. Of course, we could break through, but would I want to be stepping into a buy now? No, I don't think so. And the S&P as well, seeing some downside, hasn't done anything structurally to say we're bearish. Yes, we failed at highs, which again is a slight red flag, but again, it's the key lows that I want to be seen taking out or being respected. That's where my focus will be. Highs, they can be rejected, but then suddenly they can be broken. If the lows are broken, now structurally that means we're different. So with NAS, I'm going to be a bit more patient with that one. And then pound USD, I was looking for shorts, but it looks like I've kind of missed the move here. We had a very nice kind of sluggish pullback, momentum stepped in, and we kind of just fell over quite aggressively in the past kind of day or so. I was looking for a bit more upside towards the high of the range, because simply the idea coming into the week was pound USD stuck in a range, DXY similar range as well, euro dollar. A lot of the USD pairs actually stuck in wide ranges. And the reason I like pound USD is because the risk reward made sense. We rejected the high of the range, and all I'm looking to do is see if I can short it back to this area. Now, price has tested the area there. The key advantage is kind of gone now. Price could still see some more downside. Effectively, we could still see a push to the other side of the range. That is still a reasonable expectation, but I want to be positioned around here because we've had such a fast move higher. Price has a good chance of at least correcting that. This is the 50% of the range, and this is technically where we do see a bit more noise, a bit more consolidation. Price could retrace 50% and push back up, or it might consolidate, or of course it might push to the other end. But that's really the value which I wanted to target this week. Now that price is there and I'm not in a position, like I said, the opportunity's kind of already gone, even though we can still see some more downside. So those are the two main culprits I was focused on this week. Unfortunately, didn't take any positions. I do have some other pairs that I do have my eyes on, but being quite patient with them. What's up, guys? Hope you're all doing good. What's up, Yoshi? What's up, Chris? Welcome to the stream. Chris, number 2, what's up? Welcome. Cycling, welcome to the stream. Hope you guys are doing good. It's been an interesting week, though. It's been an interesting week, of course. Gold and silver just causing more havoc Very eventful last week. Silver looking very bearish, down 14% today. That's huge in itself. But of course, if you look at the context of last week, it doesn't even look that big. But 14% is a big drop. And of course, crypto not looking too healthy as well. BTC still falling, testing around 67, 68K, taking out this low. So it's a bit of a bloodbath at the moment for the markets. And it depends how you're looking at it. If you're just looking for day trading opportunities, it's actually a good time to be trading, especially intraday, because you want momentum. Momentum is here. You're just looking for short-term opportunities to ride that momentum. If you're looking for like swing trades, it depends on your bias. So for example, like some of the USD pairs, I don't really have great opportunities to swing them at the moment because they're kind of just very flat. That's dollar CAD. Dollar yen's different, but I'm being a bit watchful of that one. Aussie dollar on the grander scheme is very flat as well. Major resistance around here, price is trading at. There could be some downside opportunity there, which I'm watching for, but that's not quite confirmed yet. What I want to see going into next week, and this would be a market which I'll be interested in next week, is if we can close back below this area, because we're kind of trading above it. But should this be a fake out, price can't sustain above this level, we close back inside. I do think similar to pound USD, just looking to take advantage of a correction back to value. So Aussie dollar could be an interesting one. Dollar CHF, I like dollar CHF because I still do see a lot more downside to it. I just need price to kind of give me a decent pullback and pull back into structure before I take a trade. So effectively anywhere in this area, and that would interest me because I do think dollar CHF long term has still a lot of room to the downside, basically back to all-time lows, which is the wick low here. I do think that eventually is likely to be filled. So just basically looking to short, as long as structure remains, just basically looking to short the pullbacks there. So dollar CHF, definitely a market which I'll be interested across the year as long as structure remains. Of course, if price does start to do something like this, that would change things and I have to be a bit more patient. But yeah, USD pairs, not seeing much opportunity right now, being a bit more patient. Okay, we can take a look at dollar yen and Aussie yen. We'll go through some requests. S&P, will it hit 7K? We'll take a look at the S&P as well, then we'll take a look at BTC too. So in terms of dollar yen's a bit awkward. I say that because you had such a aggressive move down, then prices kind of retraced about 80, 70% of that move. So in terms of finding a trade, well, I would keep it short term just because direction is a little bit not as clear as it could be. We've got significant resistance, which price essentially failed to break through. And of course, we had the reaction after that. Now price is shooting back towards that level. So naturally, I would be looking for some short-term sell opportunities from this area. Now, I say short-term because in terms of the trend, in terms of momentum, we are still pointing up. And I do think eventually we probably will see price break this level. So I wouldn't be banking on a move like this, but I do think naturally this is a smart place for a short. We're seeing evidence of price struggling there. As long as we can see that evidence continue to remain, there's a good chance we can see some downside off that area. So dollar yen, I would be waiting for a bit more upside back towards the 58, 59 area. See what type of price action we can get around there. And I'll be looking for some short-term down plays. Not even a push back to this low. I think that's still a little bit too confident for my books. But again, depends on the time frames you're looking at. And I'll probably discuss that more when we get there. But those are the opportunities I'll be looking at. Anything else, I don't really see much there in dollar yen. In terms of Aussie yen, that's still very bullish. Of course, down on the day, but you can see the trend on the daily chart looking very, very clean. Have we just about poked the highs? Yes, we have. So Aussie yen's interested now. So very bullish market, it has been flying. Just about peaked through the highs there. Do I want to be buying it now? No, not really. Do I want to be selling it? Potentially, because if you do expand to like the monthly chart, this is not really a market that trends, and we're actually trading at some very kind of critical prices where we could see price tire. So you can see effectively this is the range you've had for the past 2-3 decades. So naturally, it's actually a great place to be looking to sell. But of course, this is higher time frames that could take a while to actually, materialize. So from a low time frame perspective, let's jump to the 4-hour chart. Everything is still bullish, and I would still say it's very early to sell unless you're going to have a wide stop loss, because we could still push slightly higher up before coming down, and that could be enough to knock you out the trade. So I would be waiting for signs that maybe we're failing at highs, equal highs. That would be a good sign. Market starts to break through some prior lows, and then I'll be looking for some shorting opportunities. Like I said, I'm not really interested in the buys anymore. We could break out. I'll wait for evidence to support that, but I'm not going to try and force buys. Yes, the trend is up and trend's your friend, but not at a location like this, on a pair like this. So Aussie yen, I'll be shifting more to a bearish bias, not confirmed yet. I need structure to align with that direction as well. In terms of S&P, would we go to 7K? Haven't really been focused too much on the S&P. I've been focused more on the NASDAQ this week. In terms of 7K, that'll take us back to highs roughly. Yeah, I'll be careful of that. In terms of the environment we're in right now, everything's kind of bleeding. So it's not like the S&P is having a bit of a pullback and everything else is doing fine. So you would expect the S&P to correct. Everything is pointing down right now. So jumping into some buys, you're basically betting on a bottom here and momentum shifting, which if we can see price show evidence of that, that would be a good trade, but not when momentum is still pushing down. I can't be confident saying 7K is going to be hit when momentum is still looking really bearish and we're breaking through lows as well. So I would say keep an eye on this area. This is the area I want to see hold. If the S&P breaks through that, then yeah, eventually I would expect price to revert back to 7K, but we could still see a lot of downside, a bigger pullback. Let's not forget the S&P has been showing signs of exhaustion for the past few months here. If you look at the highs, every time price does take out a high, it's only just by a small margin before we have a big correction. You can see there, small margin, another small margin, and here, a very small margin before we're looking bearish. So every time we create a new high, the market seems to be very tired and has quite considerable pullbacks. Prior to this bullish move, things were very healthy. We're ripping through highs. Momentum looked good. Structurally, we're different now. So because of that, I would be very patient jumping to longs. It's not the same market as we were over here, September, October 2025 to now. So because of that, I want to see some really strong signs that price is rejecting this area and we're still maintaining higher lows. If we can do that, great, the buys make sense. If we break through the low, I would be very patient with longs. Yeah, very patient with longs. We could see a lot more downside. We can take a look at BTC next. We can go through that. Of course, that is absolutely falling out the sky at the moment. Yeah, I'm not a big fan of Bitcoin at the moment right now. It depends on how you want to trade it. If you're looking for just to pick up Bitcoin because it's at a good price, that's a different mindset from someone who's looking to trade Bitcoin for the short term, of course. If you're looking to do anything with BTC at the moment, especially from a trading perspective, while momentum is looking incredibly bearish, I'll be looking for some short-term selling opportunities. Basically taking advantage of the momentum. That's all I'm looking to do if I was looking to sell it. In terms of where we could be going, well, we are breaking some structure here, which is not a good look for BTC. Because again, the whole point of a bull cycle is that we're exponentially picking up momentum and ripping through highs. We've been making new highs, but every time we make a new high, similar to the S&P, although not to the same extent, each high has been less kind of aggressive. We create a high here, create another high, and you can see this high is less aggressive than the previous one. Now we're starting to break through lows as well. This could be a bit of a bear cycle that forms with BTC. So yeah, in terms of momentum, great. You can be looking for some very short-term selling opportunities intraday. I wouldn't be looking to hold onto anything for a big swing because I don't know how far this is going to go. And we are very kind of overextended already. So short term, you've got some selling opportunities there across the board. Ethereum in a similar situation. Again, the emphasis on the short term selling opportunity, because all you're looking to take advantage of is the current momentum, not particularly a certain price or anything like that. So yeah, BTC, I won't have a long bias right now, purely from a trading perspective. Structures pointing down, we're taking out key lows on the weekly chart. This is not what you want to be seeing if you're looking to pick up some longs. So be very, very patient with BTC. I want to see how the weekly candle does close, because of course it's Thursday today. The weekly candle's going to close on Sunday. So we still have a few days left, and potentially we could see price pull back above this low. Although we're looking very bearish right now, we could still see price pull back and close above that. So it's going to be interesting to see how we close on the weekend. But of course, at the moment, yeah, looking very, very bearish, and I don't see much opportunity just yet. Okay, we can take a look at the yen basket as well. We can take a look at gold too. Yeah, very, very true. Very, very true. Especially with this momentum as well. If you bought at the highs there, you're definitely in some pain at the moment. Okay, so we'll go through the yen basket, and then we'll take a look at gold afterwards. Where's the yen basket? There it is. So with the yen basket, it's been an interesting one, because we are still technically quite bearish, and even on today's candle, or this week's candle actually, on the weekly chart, we're pointing down as well. So it's a situation where we are still very bearish. The trend is still pointing down. There are signs of slowing momentum, and of course, based on where we're trading, you wouldn't be surprised if we do start to push up soon. So again, if I'm looking to sell the yen, so take advantage of yen weakness, I'm not expecting huge moves in my favor. It could happen, of course, but I'm very much aware, we're trading at this price rather than this price. If I'm selling here, I kind of have the expectation that price is probably going to come back to this low. Now that we're at the low, we could go further, but equally we could start to retrace as well. So if I'm looking at the yen basket, I'm like, okay, everything is still pretty bearish here. Momentum is still pointing down. I'm fully aware that we could be seeing a bigger pullback at some point. So if I do get short on the yen, so potentially long pound yen, long euro yen, etc., I'm very much aware that my targets are going to be short term. Maybe I leave a trading stop loss just in case it runs. It depends on your style, of course. But yeah, yen basket is still pointing down. Structure, everything still looks pretty bearish. I mean, we had this aggressive move there, of course, recently, which did break through highs, but we kind of just rolled back over. So effectively, it hasn't really led to anything. So I wouldn't read too much into that. If we were to double bottom and then break through the high again, okay, that's different. But we broke through highs and just rolled back over. So at this point, we're back bearish. I would say keep an eye on structure around here. This could be an interesting place for us to form another low high and see some more selling pressure. So looking at the yen pairs, pound yen as well. Again, I'll be keeping an eye on this one. I probably would wait for a deeper pullback to here before looking to buy, just because every time price creates a new high, that's exactly where we keep coming back to. Once, twice, third time, fourth time, and now we create a new high. There's a good chance the fifth time we could come back there. So this has proven to be a very stubborn level of support, and effectively, if we can hold that, I would still say we're effectively bullish. Break through that though, yeah, we could be looking at maybe some counter trends forming. I wouldn't say pound yen is probably the best yen pair to be buying anyway. But if you are, I'll be looking for deeper pullbacks. And of course, we can take a look at gold as well. So of course, looking pretty bearish today. What's the situation for gold? Do we still think gold's in that bull cycle? Still can rip back to highs, back to 5,500, maybe start making its way to 6K potentially? Well, long term, I'm still very much on board with that. But again, as a technical based trader, do the technicals really align with that right now? No, not really. So I wouldn't really be looking for any meaningful longs. And again, I'm talking from a swing standpoint. I'm not saying day trade, you can still get away with that. But any meaningful longs, like targeting the high again, I think that's a little bit over optimistic, or just optimistic in general. So yeah, gold to me, first of all, I'm not really a fan of the price action, so I wouldn't really be looking to do anything. I wouldn't be looking to sell. I wouldn't be looking to buy. I said yesterday on my channel that if price can continue with these high lows, that would interest me, because of course we had the massive sell last week. We formed this low here, then we formed a higher low, then we formed another higher low. So I said, if we can keep doing this, well, that would say, okay, maybe we are recovering, and maybe this was just a big correction, profit taking, etc., and maybe we can recover that and start to pick up momentum. But since then, we've kind of rolled back over. Prices broken through lows, forming lower highs. This could either turn into a big consolidation, or it could roll over back to lows. So from that perspective, buys just don't look great anymore. So I'd be very careful looking to buy gold, very careful looking to buy silver. Silver's looking a lot more bearish than gold, so I would not be looking to buy silver at this point either. Yeah, I'm just kind of waiting for more information, because I'm not so keen to short. The reason why I'm not so keen to short is because we've already seen substantial downside. We've had so much downside here. So, because if I'm looking to take a trade, especially a swing trade, I'm taking the trade because I'm expecting price to make a considerable move in one direction. If we've already made a considerable move in one direction, then that does lower the chance of us seeing another big move. Depends on the situation. But certainly in this, we were in a very aggressive bull cycle. We've seen a huge sell-off. Do I still want to bet on more downside? Yeah, maybe a bit more, but nothing substantial. So that's why I'm not really looking to sell gold or sell silver, because we've already seen a lot of downside. So although we are looking bearish still, and we might still see price crawl over, I just think in terms of the risk reward, there might not be that much opportunity there. It depends on what time frames you're looking at as well. So that's why I'm a bit cautious on selling them. And of course, from a buying standpoint, well, I definitely don't be jumping into any buys at the moment. So just being cautious on both of those, well, in terms of the metals in general. Gold looks attractive at 4,300. Let's take a look. Where's that? 4,300. Excuse me. So I imagine that's where you want to pick up some longs. Back around there. Well, I mean, it could do. It could do. We're coming back into some significant lows, which kind of gave us our last catapult, really. So that's an interesting area, and it kind of overlaps with that high there too. Generally speaking, it is an area of value between 4,300, 4,400. This area roughly could be an area which gold finds a bit of trouble pushing lower. Yeah, it's just I want more evidence, especially from a trading perspective. If it's like, okay, price at a good, gold's at a good price, let me just take a long position with the expectation we're going to see higher prices in the future. That's different. But from a trading perspective, I really want to see how we react with this area. I'm never really the type of trader just to have a price and then just take a position because we're there. I'm always looking to see what price is doing there, and then that will make me decide to take a trade or not. And in gold situation, absolutely that will be the case, because we've fallen so hard here. So if we come back down again, I don't know if we're going to break through that or price is going to turn around. So yeah, I do like the area. It's definitely an area which price is stalled in previously. Over there. So around that area would be an interesting point. It's just, let's see how price reacts, and of course we can react to that. And likewise with silver as well, we do have some structure lower down, which we could see silver come back and retest, and from there we could investigate for some longs as well. I mean, we kind of are at area here, but we've got this area, although that would be a very big push down. 54, that would be a huge move from 120 to 50. Yeah, that kind of undoes quite a lot of the bull cycle. So I probably wouldn't consider this at the moment. Of course, never say never, but this is definitely an interesting area. Gold looks a bit better in my opinion. So that's where the focus will be. Anyway, guys, we have come up to the end of my segment. I do appreciate you guys tuning in, and of course, myself being here. I really do appreciate the opportunity. So big thanks to the A1 team. Hope you guys do have a great day, great weekend. Of course, check out my channel. It's just my name, Miko Audu. I'm sure you guys have already checked it out, but of course, if you haven't done already, I do streams, post analysis as well. So if you are interested, check it out as well. But yeah, guys, really appreciate you tuning in. Have a great day, great weekend, a good trading week as always. Take care, guys. I'll see you all in the next one.
Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hey, how's everyone doing? Happy Thursday. Hope you're all good. Hope you're all well. So there's not much going on in the markets in terms of developments, really, specifically on the Edge Finder. As we spoke about yesterday, we've still got the yen getting a very bearish bias overall. New Zealand yen, Aussie yen, CAD yen, pound yen, euro yen, and Swiss yen all getting bullish readings. So, of course, short yen is still clearly the play. The S&P is getting a bearish reading. Euro Aussie, we'll go over Euro Aussie in a second. Silver's getting a bearish reading as well. Interesting, I didn't notice that. And dollars is still there as well with a bearish reading. Sluggy, hello. Chris, hey, how you doing? And other Chris, how you doing? Did I see GBP? I did indeed. We had, let me just check. What was it? I saw it earlier. Just let me refresh. Yes, the Bank of England holds interest rates at 3.75. And then the further update was traders add to bearish Bank of England rate cut bets after a surprisingly dovish 5-4 hold on the vote. So yeah, I mean, it benefited my pound Aussie trade quite nicely, although not a huge deal in terms of short-term price action, but it is one of those ticks in the boxes as the RBA remains firmly on the other side of that. So Euro Aussie, as we just said, it's on the Edge Finder with a bearish reading. So I am still looking to be a short seller. I've been watching this one for probably 2 weeks now. I decided to opt into pound Aussie instead of Euro Aussie at the time. So now we've seen the trends fully establish. The fundamentals are still in play, and the pound Aussie trade is locked in with profits with a trailing stop. I would be quite happy to reallocate some risk over to Euro Aussie. So I'm looking at the current level here, which is the 50% retracement level on the fib, or the 61.8, sort of within the fib zone, would be quite nice. The only downside to this is sort of the higher timeframes. Well, I'll say higher timeframes, more the daily. So I'm still very keen on the idea that this left side here down towards potentially 1.64, let's just say 1.64 for the sake of round numbers. I'm still sure we could see a correction of all of this move and a return back into this little range that we had. But as I was saying, the sort of confusion, or not confusion. Yeah, sorry guys, I'm using my phone again as a webcam. It does that when it loses connection, but it should fix itself. So what was I saying? Yes, the daily is looking a little bit too extended. So we just had these moving averages cross almost here as well. The RSI is oversold. Now, these obviously aren't complex things, but it is just a way to filter out, do I want to sell now? And my answer is no, because again, we've just had this trend change. Technically on the RSI, we're a bit oversold. So I'd like to wait to see if we can get another slightly deeper pullback on the daily, come and meet these moving averages. reject off here, and then, you know, come back to the downside and correct the left side. That's the idea. Whether we get that or not is a different story. So we'll see. It's possible, you know, we just reverse here and we continue this aggressive trend. But to be honest, yeah, it's a little bit too extended for me to be happy with that. I do apologize about the camera. I know it's a little bit annoying. It keeps beeping at me when it does it. Something's wrong with your camera. Yeah, it's just what it is. So I use, at the moment, I'm using my iPhone. So it's the continuity camera. And oh my gosh, it's so bad. It's really, really poor. I was wanting to get long GBP USD, but decided to go euro dollar. Yes, I'm also long euro dollar actually here. So it's not done a great deal. I was actually very tempted to close it, to be honest with you, because yesterday we had a pretty decent push initially. It showed promise, but then it very quickly came back down into a little bit of drawdown. Now this trade was pretty much just a technical trade. There wasn't really any fundamentals that I was using to back up this idea. So I've got no problem cutting the trade if it doesn't continue to display what I need. So I'm going to give it this chance here. If we can continue higher and create a new bullish leg, fine. I can trail stops and just let the trade run. However, from here, if we end up just range bound, I'll cut the trade. If we end up coming lower, breaking this 200, I'll cut the trade. And the reason I quite like this trade. So normally, obviously, if anyone watches my content regularly, you'll know, obviously, I rely on fundamentals and the edge finder very heavily. But the thing behind the pound dollar is this 1.2 level right here. So we know the ECB spoke about 1.2 previously. That's not new news. We came up to 1.2, briefly came above, and then failed to hold above. Normally, when we have these situations of key levels, it's not that often. You will just see it touch once, reject, and then it'll form a new trend. However, what we can sometimes expect is a retest, maybe a double top, and then if they still, you know, if the buyers still don't like that level or there's a reason to be short, then they might look to short there. So that's kind of my theory. But again, it's not based in any real fundamental data. So it's not a fantastic trade idea. I am still long on silver, to be perfectly transparent. It's not going too well. However, it's completely fine. So the risk allocated to it is very small. As I mentioned this yesterday, but I want to clarify again. When it says 20% injection, it's not 20% of the entire capital or the entire account. It's 20% of what I allocate to the trade. So for example, I might allocate 2% for this entire sort of DCA trade. So it would be 20% of that entire 2%. Does that make sense? I just don't want anyone to see that and try and replicate with 20% of 20% of their own account. That would be a little bit messy. So actually, having said that about Euro Aussie, we are seeing a little bit of a rejection here on the H4. So although I was saying I wouldn't really want to sell it here, if we saw enough selling pressure coming here, and we see a really strong bearish H4 candle, I wouldn't be opposed to taking a very, very tight stop loss position, something like this. Not crazy, but more in anticipation that we could continue slightly lower. But again, it's definitely not the most ideal type of setup right now. All right, let's see. Looking for New Zealand yen longs. I'm in New Zealand yen as well. So that's nice. Sluggy, we've got the sluggy indicator there. So yeah, the New Zealand yen wasn't a technical. This is actually the polar opposite of the euro dollar trade I just showed you. So there is no technicals behind this trade. It was just a case of the market's moving, I'm buying in. And of course, the edge finder is here to back up the idea nicely. We've got the very bullish reading on New Zealand yen with a score of 10. And the carry trade dynamic is still completely in play. So yeah, I like the idea, but the entry was definitely not optimal. Yeah, it probably could have been better, but it is what it is. Again, it's not a technical trade really. New Zealand US dollar. Yeah, we can have a look at that shortly. Do we think the Nikkei has more room to run up? It's been like 70% gain since Liberation Day. Yeah, so I took a very quick long on the Nikkei. Actually, not this. I was looking to take that. I was long I think it was roughly around here. I didn't take a huge trade. It was just a 1-to-1. It wasn't anything fancy or anything to shout about. But yes, I am still bullish on the Nikkei. So as you can see, I am waiting to be a buy. I'm just watching to see how price develops over the next couple of hours or over the next day or two. But yeah, I mean, technically, it's completely fine. Where's my brush here? Bullish trend is completely intact. We are continuing to make these higher lows. And it seems like this could be the next higher low and a move up to the upside. If you are a little bit more cautious on a technical front, you might want to just wait for a break and retest of this level because this is very clearly providing quite a lot of resistance. So you might want to wait for something like this. That would be significantly more sensible, in my opinion. I'm not sure if the Nikkei is here. Let's see. Data scanners, indices scanners. Actually, let's go to the AI market scanner. I keep forgetting it's there up here. Just bear with me. Let me find it. There we go. Nikkei. It's actually getting a -3 reading. So that contradicts what I was saying. So yeah, based on the edge finder, there is not really anything to do here. I wouldn't want to be a seller just because of the bullish trend, but I also wouldn't want to be a buyer because of the edge finder. So two mixed signals there tells me to stay away. That's basically how my trading operates. If the edge finder is saying one thing, but the charts are saying a different thing from the way I look at them, then there is no trade. They both have to align. I just noticed Shills is here. Hello, Shills. Hope you're well. What's your opinion on US dollar CAD? To be honest with you, I don't think I really have an opinion on dollar CAD. The last I heard from my commodities guy was that oil is looking relatively bullish. Not by any significance, not like a huge amount, but it's got some support, which you can clearly see here on the chart as well, with this recent uptrend on the H4. So that makes me slightly bullish on the Canadian dollar. But then, as I was saying yesterday, I don't really have anything on the US dollar because we had, we attempted, where's the brush here? We attempted to break below this range, but we also attempted to break below these trend lines, which, you know, whether you use trend lines or not, you can't deny that the one that's been in place since 2009 is relevant. It's a significant level to pay attention to. But we failed. Now that's the problem, that we failed to break out. And this is a weekly candle, by the way. So the fact that we've wicked down quite significantly, ended up closing bullish, and this week's dollar candle is bullish as well, makes me think that we could end up seeing some sort of correction of this candle from 2 weeks ago. So we might see sort of 99-ish, but beyond that, I don't really have anything. I don't really have a reason to be a buyer or a seller of the dollar. So if we look at the edge finder and we look at the surprise index, the dollar's getting 64, which is relatively supportive. But then if we also look at the strength index, hold on, let me refresh. Bear in mind, the strength index is a longer term view. So it's not necessarily in play right now, but it can give you that longer term bias if you're looking for a long swing trade, even a position trade potentially. So the dollar is getting this bullish reading. But in terms of the data that's been coming out of the data that's been coming out of the US, there's not really enough there for me to say, yes, I want to be a buyer at this level. So yeah, that's kind of my view in terms of dollar CAD. There's not much there in terms of the market driver. The H4 is significantly bearish, actually. Really, quite aggressive to the downside. The daily is also quite aggressive to the downside. So it depends what you want to do. I'm not bothered either way, to be honest. I don't have a bias. But if I was to just go with my gut feeling, which is potentially shorts, and that's mainly just paying attention to the trend, I would be looking for something like this, to sell at the fib zone, wait for a pullback towards these moving averages, and then maybe just take it back to this recent low. But again, I don't have a care in the world, to be honest, about dollar CAD right now. Definitely not on my watch list. Okay, hold on, I missed quite a few messages. Let's see. Euro's been really dead. Stayed away from it recently. Yeah, I'm not really a fan of the euro right now either. James the Indicator has the same plan. Oh, the James Indicator. Only reason it's moving because of the dollar volatility. Yeah. Filled. Oh, euro pound. Are you bullish, Luggy? Are you buying it? Holding New Zealand yen longs. Fantastic, Aizen. Can you cover pound Australian? Yeah, I mean, to be honest, there's not really much to cover. It's just a case of wait for pullbacks and sell, as far as I'm concerned anyway. So I took this trade, about 2 weeks ago-ish. Oh, it was the 19th of January, so yeah, a little while ago. But yeah, I did actually scale in, full transparency. I scaled in, I think it was here, but I was stopped out because I used a relatively tight stop, which in hindsight was obviously a bad idea or the incorrect move. But either way, it doesn't matter. I think the best way to trade this market really is just wait for pullbacks on lower timeframes, look to enter, and let it run. The fundamentals are still very, very bearish. When I say very, very bearish, I'm not talking about the sort of edge finder fundamentals. I'm talking more about the central bank divergence are really supportive for the pound Aussie to continue lower. Pound yen short and Australian pound short. Weird. Do you mean pound Australian? I don't think I've ever seen someone trade the Australian pound. Anyway, I'm not trying to be pedantic. I'm just curious. So pound yen short, interesting play. So I was looking, in fact, we were discussing pound yen yesterday on this stream, and I was looking to see, not looking to see, I was saying that my entry criteria would be what we've got now, actually, which is this bullish trend remains intact, pull back towards these moving averages, because when we were talking about it, I think we're somewhere around here. I was saying we were quite far away from these moving averages, so just a little bit of a reversion would be completely acceptable and kind of expected. Pull back into some minor levels of structure, and then if we can see a rejection here, that would be quite a nice signal to potentially be a buyer. Although we did get some dovish news out of the Bank of England, I still think euro pound is a bullish market. Maybe not right now. Maybe let the dust settle. But overall, I still would it's not the right word. I still would lean towards being a buyer. I'm a stock guy. No problem, Robo. What EMAs am I using? The 50, which is this one. So I use exponential moving averages, 50, a 100, and a 200 as well. SFX, no problem at all. But euro pound, interesting, Sluggy. Let's have a look at euro pound then. It's a good thing I didn't go short here, wasn't it? Let's have a look at your trade. So where did you go? Hold on, let me just extend these. So you went long at 0.862. Oh, wow, you caught the bottom. Very nice. But my question is, why did you buy there? Is it this daily support level here? Because that, for me, personally, that's a very, very aggressive entry. But clearly, it's paying off for you. I mean, really nice entry. Great catch. Well done. Yeah, nice 5 risk to reward. Fantastic. New Zealand CAD long. Was New Zealand CAD? Again, I don't really have anything for New Zealand CAD in terms of fundamentals. Let's see. I don't know if it's on the top setups. No, it's not. Yeah, so the fact that it's flat on the... Oh, wait, sorry, it is. It's bullish. Score of 8. Okay. So that changes things. Let's see what the daily is doing. So daily technically is still bullish, actually, but it looks like we might have the cross on the daily just to signal that trend change. So what I would like to see potentially on the daily, and the reason I'm using the daily in this situation is just because the H4 has moved so much. I would like to see a little bit of a deeper pullback on the daily rather than the H4. So fib from low to high. Yeah, I'm not sure. I would take this approach basically of just looking for a fib pullback. However, I just don't think it's appropriate to use the sort of fib zone that I normally use in this situation, just because I don't see any structure. When I use a fib, I like to have some structure within the zone just to act as, sort of support, resistance, break and retest, that type of thing, just to help increase the probability of it. So you could sort of draw something like this and use it, but it's a little bit sort of flimsy, a little bit forced. So you could look for this if you don't mind taking a couple of different attempts. That might be like option 1. Option 2 would be potentially a slightly deeper correction into these highs here. And that could then be potentially an entry number 2 or second attempt. But yeah, in terms of technicals, not ideal for me and my strategy. But if you can identify a way to get in, I think it's a completely valid trade. Are you wary of the intervention or not? I'm cautious of it. I'm aware that it could happen, but I'm not that interested just yet. So previously I was, and the reason I'm not that bothered yet or at the moment is because of this move we had on dollar yen. So I think that was a sort of a little bit of a pause, a moment for it to chill, So the whole idea of an intervention is to slow down the depreciation of the yen against the dollar. So that is basically what happened here without an intervention actually taking place. So this acted like an intervention. Does that make sense? So I don't think the Bank of Japan would intervene right after this move. I think they would like to intervene. And this, again, I want to clarify. I have no idea, like set in stone. I couldn't tell you for sure. But this is just my idea. I don't think they would want to intervene until we start reaching this previous all-time high. So until then, yes, I'm cautious and slightly aware that it could happen, but I'm doubtful it will happen until we reach sort of 160 and above. Australian, Swiss, Australian, New Zealand. Yeah, let's have a look at those in a second. James, now I'm looking for any softening in GBP CPI. Yeah, that would be a fantastic tick in the box, Sluggy. I like it. Yes, it would absolutely. If we get lower inflation out of the UK, that would 100% feed into that rate cut narrative by the Bank of England. So it'd definitely be a significantly bearish catalyst for the pound, or further catalyst. Hurry check the S&P 500. Yeah, the indices markets are very clearly having a rough time here. There's nothing here for me just yet because actually let's just see. So the S&P is getting a bearish reading, but it's only 5. So I'd need to see that tick down to -6. But I would also need to see these lows start getting wiped out, because at the moment we can see very clearly we are getting buying interest off this level. So I don't want to sell into that because selling indices markets is very, very difficult to do in the first place. And if you're selling them without enough confluence and enough confirmation, you're just going to get wiped out. So I would need, like I said, I'd need to see a very clear shift in the trend. I'd need to see the edge finder decrease its reading on the S&P, and then maybe I would consider it. But for now, there's no chance. Uptrend should buy now? No, not necessarily. As far as I'm aware, and I say this all the time, I'm not a stocks guy, so take this with a pinch of salt. But as far as I'm aware, earnings have been pretty dreadful. On top of that, as I just showed you, we are getting this bearish reading on the edge finder, which is signaling that we've got these economic indicators that are working against this market right now. So being a buyer, I'm not interested. Being a seller, I'm also not interested just yet. Also, James, it has been a wonderful call on FTSE since private webinar back in December. To be honest, I've not paid any attention. Let's see, what is the FTSE doing? Yeah, I mean, the FTSE's never really been a focus of mine. I called bullish FTSE exporters on that private webinar. But yeah, I mean, to be honest, I think the UK needs to come down in terms of the sterling and the FTSE as well. So saying that, I think, yes, it's been quite fruitful. So if you guys were in the webinar that we held I think it was the 17th of November, 2025. Me, Nick, Chris Pulver, and I think Marco was on there as well. It was a invite-only webinar where you could have applied. It was free, but it wasn't public on YouTube. We all covered different things. So my topic on that was the pound and how I think it's overvalued. And in 2026, likely we're going to continue lower or start heading lower, which, yeah, has been the right call so far. I mean, I focused on pound dollar, which wasn't as fruitful, but yeah, pound Australian has been fantastic. Anyway, I've got about 4 minutes left. So let's just see if there's anything else to pay attention to. Bitcoin seems to be continuing lower, which is interesting to see. So yesterday we were looking at this, and again, I just want to clarify, I'm not a Bitcoin guy. I don't trade crypto. I don't pay attention to it really, and I'm not even 100% sure on what the true drivers of Bitcoin are. But just looking at the chart, 2017, 80% crash. 2022, 76%. Almost 78% crash. 2026, we're currently having a crash. Now, we are breaking this level of what could have acted as support. That was sort of the main technical area, in my opinion, that would have provided support. The next thing is we are coming into this weekly 200 moving average, which again is probably the only technical thing right now that can provide support for Bitcoin. If we end up breaking this level completely, we end up breaking this 200 moving average, I really do think the next stop is somewhere between 20 and 30K. Now, I don't really get pleasure from saying that because I know a lot of people lose money and it's not going to be a pretty sight at all. However, again, just based on the technicals, that does seem very likely. But I don't have a horse in this race. Again, I'm not a Bitcoin trader. I don't really care, to be honest, but that's just my observation. So yeah, if you're in Bitcoin or you pay any attention to it, be very, very cautious. And to be honest, I am looking to possibly be a seller. As I said, I don't trade it really, but given this current situation, I wouldn't mind taking a small attempt. So if we could come back up, possibly a 50% retracement towards the 61.8, retest these lows. So it'd be a break and retest. I might go short there. So it would look something like this. Stop loss at the high, and then take profit down towards maybe 40K roughly, somewhere like that. And the reason the stop would be here, obviously top of the fib, previous high, but also it would allow, or if we did come up towards this, it would be a slight mean reversion towards the 200 moving average, which would be quite healthy. It would be a very sort of standard healthy pullback to potentially enter short on. Anyway, got a minute left, so let's do a final check. So yeah, as I said, silver definitely not paying the bills right now, but that's okay. I'm in it for the long haul. Oh, I told you, is it yesterday I was in palladium? Yes, it was palladium that I was in yesterday. God, get my words mixed up. Got out of palladium break even, and I was also in the Russell here. Yeah, so we're in the Russell, which also was taken out at break even. So yeah, bit of a flat period this week, but yeah, nothing overly interesting. But I would quite like to be in the Nikkei or the Nikkei. I think the Nikkei is fine. DAX, not really that interested. US markets, not really very interested. Metals, I do remain bullish long term. Short term, I am quite cautious about potentially further downside, but to be honest, for me, that's completely fine. It's just a better area to buy. The pound, I'm still bearish. The Australian dollar, still bullish. US dollar, I suppose I do have a slightly bullish lean, but I'd need to see this weekly candle close back within this range. And then I would also need to see how it reacts around the 99 to 100 level. So if the dollar can start, if the dollar can break above, retest here, and then continue higher, that would tell me that the likelihood is that we're going to start this new, the new sort of bullish cycle, if you will. So basically what I mean by that is the same thing we've had repeatedly since these trends formed. So obviously we come down, we have a bullish cycle, we come down, bullish cycle, come down, bullish cycle. I would expect that to repeat, but whether it will or not is anybody's guess right now. So there we go. So, ladies and gentlemen, I am going to head off. I think it's Marco on after me, so don't go anywhere. You're in great hands with Marco. Great trader, very entertaining. So, guys, have a good one. Stay safe. I'll see you all tomorrow. Don't get margin called. Yeah, don't go anywhere.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to the show. Before we get started, in the comment section, I have a form for you to fill out to be able to participate in the giveaway. So we are continuing with the giveaways. I have, I believe, 15 more codes. So 15 more codes to give away. If you want to participate, make sure you fill out the JOT form, and in 15 minutes, we will do a spin of the wheel and a random winner will win a challenge. Okay? So here's the form. It's in the comments. Fill it out. You'll be able to participate. Just a heads up, if you want to get funded, there's also a discount code, which is A1Live, and it gets you 25% off, 25% off any DNA funded challenge. Now, getting into the markets, what has been happening? We have quite a lot of activity. Nick gave a signal to sell silver yesterday. So if you're in the A1 Discord, you would have gotten this signal. My Nikkei is still in profit, but not looking so great. I want to focus on silver. So I actually took his signal on my prop firm accounts because my main goal with the prop accounts, I have FTMO, Alpha Capital, DarwinX, DNA Funded. The main goal with the prop accounts is to execute as much trades as I can. The more trades that I execute, of course, the trades must have an edge. But if I know about the edge, then the more trades I execute, the closer I am to the next payout. So took this trade signal from Nick, working great so far. Why didn't I take it on my personal? You might ask, because on my personal, I want to focus on only my ideas because I'm building a track record. So with prop firms, it's an expendable account. It's all about the payout, while with a personal, it's about building a track record and attracting investors. So again, a great call from Nick. Absolutely awesome. Selling silver in profit right now. I think it's, what, a 2-to-1, something like that, reward to risk. What is happening with gold and silver is we are starting to sell off even more. Now, I told you gold is actually on my watch list. I'm looking to buy it. And that would be my personal trade idea. But I won't do anything until we get a bullish reading on gold. So we need to get a bullish reading here. Otherwise, it does not fit my personal plan. So otherwise, I'm going to have to stay out of gold in any sense. So I'm not looking to sell it on my own, at least. I'm looking to buy it, but I need the edge finder confirmation. The reason I want to buy it is I do like the technical analysis behind it. I do like this uptrend. I think it's a pretty steady uptrend. I do like the fundamentals behind it. Fundamentals are still bullish. There is still uncertainty. Trump is still in office. He can still slap on massive tariffs, which all creates a great environment for gold to go higher. Silver, if you have been following me for a while, you would know that I don't really want to mess with silver. Reason is, silver is not so similar to gold. I mean, it is a precious metal, and it usually does move in the same direction as gold, but gold is purely an investment asset. Silver is an industry metal. So when there is uncertainty in the world, people will first buy gold, not really silver. And if you do your back testing, if silver makes more than 100% in a year, usually the next year is break even or negative. Now, as we know, in 2025, silver made, let's take a look, Jan to December, silver made 160 something percent. So with those kind of returns, you would expect silver to actually pull back. You would expect silver to end the year maybe around that same level, which we are now around that same level. See, this is January. This is 2nd of Jan. We are now pretty much at the same levels. So I would not be surprised if we get an even bigger correction. And then later in the year, we start going higher and we end up the year somewhere around break even, maybe a bit above break even. But personally, I would not be surprised if we drop down even more. I'm not going to basically put on any positions unless, of course, Nick has a position. I'll put it on my prop firm accounts. Personally, I want to focus on gold with my own capital. I want to buy gold. I think it's still a good play to buy gold if we get a bullish reading on the edge finder. Now, will we get it? That's the question. We do have NFP, which has been delayed. So NFP will not happen this week, but I think it's going to happen next week. So if you go to the Forex Factory calendar, you look at the next week, NFP should happen on Friday. So we had the brief government shutdown. If you have been following the situation, the US government was shut down for, I think, 3-4 days, something like that. And then quickly after that, the budget was passed by Trump and the shutdown is over. So yes, they did delay the last NFP print, but pretty much the NFP print is going to happen next week on Wednesday. So just so you get an update on that. So for this to turn bullish, seasonality is obviously pretty bullish. We would need the COTS probably to go blue, and we would need some of the data right there to go blue as well. NFP could maybe increase to a score of 2, let's say. But yeah, we're gonna need sort of a turnaround in data for this gold to become bullish. So I'm a bit skeptical that it's maybe not gonna happen so soon. If we drop a bit more, if we pull back a bit more, correct a bit more, and then start going higher, that's great as well. I'll get a bigger discount, and at that point, maybe we can actually print a bullish reading on the edge finder. The only trade that I have, according to my analysis, is the Nikkei long, which is running at maybe 0.8, 0.9%, let's say. I have trailed my stop loss, and this was a trade in the A1 Trading Discord. So if you want to join the A1 Trading Discord, get all of my trades, Nick's trades, Iwin, Chris Pulver, Alan as well. If you want to get all of that, you can consider clicking the link in the description and using the code Marco to get, I think it's usually 25% off, but maybe this month we're running a 40% sale. I'm going to have to check that. Basically, the code Marco gets you a pretty nice discount on the edge finder and on the Discord as well. So I'll see you guys inside. As far as the rest of the watch list goes, Aussie dollar pulling back, which I love to see. Hopefully we can pull back to the 20 MA. At the 20 MA level, I'll be looking to get in. So I'm looking at this 20 MA to sort of catch up to the price, and then it's game on to get in on a buy setup. I do believe the score is still bullish. If we check the edge finder, go to AUD USD, switch to neutral. Okay, that is interesting. So we have switched to a neutral score, although even with the neutral edge finder for this particular currency pair, I would still be happy to get in. Main reason is I like the Aussie bullish because the RBA, Central Bank of Australia, is bullish while the Fed is dovish. Okay, so the RBA is hiking rates while Fed is cutting rates. We can even see that. If we go to interest rates and we put on the dollar, see, they're cutting, while Aussie, check it out, check out Australia, they are actually starting to hike. So from 3.6 to 3.85. And that's the perfect sort of divergence that you need for the Aussie dollar to go up. Gold, I told you my game plan. Google. Why do I have Google? So we gapped lower. Not the best scenario, if I'm being honest, with Google gapping lower. I think it's following the NAS. So I think Google is following the whoa, we're getting a bloodbath in the stock market. Definitely not looking great. So Google not looking great at the moment, but I still think that it's going to outperform the NAS, and I still think we could get a bearish play. I'll think about it. Of course, if I do decide to buy Google, you're going to get a signal in the A1 Discord. The reason I like Google so much is look at what's happening in the AI world. Google Gemini is the winner. It's taking market share from ChatGPT every single day, right? So it's growing every single day, and they seem to be the leader at the moment. That could change, of course. So they could get over. They could get, let's say, they can get crushed by a competitor, right? I got mixed up. But at the moment, they're the leader. Google Gemini is the best. If you have been using Google Gemini, you would also agree with me. I think that's bullish Google. All of the investors that want to buy AI, all of the investors that want to get into the AI game, I think they're getting into Google. It's the best bet at the moment. So on the watch list, price action looks great overall. Looks much better than the NASDAQ. I mean, compare that to the NAS. Look at this, nothing. So since the 28th of October, we pretty much had flat price action and nothing. That's an issue. So as we saw, bloodbath in the US stock market, corrections, prices pulling back, even on the Dow, even on the Russell. Looks like even Europe is underwater, Nikkei going lower. Stocks not doing well. Stocks not doing well at the moment. Silver falling even more. Okay, looks pretty good actually. Let me check my FTMO. Let's see. I have it on C Trader, so let's take a look. I have 100K stage. Okay, so 1,300 euros or so dollars in profit at the moment. That's pretty good. I like that. So we will see how the situation develops. Hopefully it drops even. Hopefully it drops even more. I think also a big story is crypto. Bitcoin getting crushed, 68K and falling. Definite crypto winter. I think it's confirmed by now. You know, this is looking super bearish. This is problematic. I would say problematic as well. At least the markets are moving. So as long as the markets are moving, we can make some percentage. And just for me to remind you, if you want to participate in the DNA challenge giveaway, it's going to be a 5K one-phase account. Make sure you fill out the form because I'm going to spin the wheel in just a few minutes and then we'll have a winner. Anyway, Bitcoin, super bearish. Price action is bearish. Bearish part of the halving cycle. There's a lack of narrative. Bitcoin is no longer this cool thing that's in the shadows. Every institution right now holds at least a little bit of Bitcoin, or like the big funds. It is below 100K, huge psychological level. And on top of all of that, you're getting a scare because of quantum computing. So quantum computing, some people are afraid that quantum computers will be able to hack the blockchain. So essentially, your Bitcoin would be worthless. Is that true? I don't know. I don't care. It's all about the market perception. So if most people out there are seeing quantum computers and getting scared about investing, the price is going to go down. That's just the way things work. Bitcoin is built on hype. This is a pure hype train, you know? So there's still a use for Bitcoin. Transacting all over the world, I think, is still cheaper with crypto compared to bank transfers. It should be cheaper, and it should be a bit faster as well. But the narrative is falling. What is MSTR? What is MicroStrategy doing, you may ask? Well, it's going lower and lower. So this is Michael Saylor's company, purely based on Bitcoin. So as Bitcoin price goes up and down, so does the price of MicroStrategy. There was a massive premium that you were paying. So when MicroStrategy was above, I think, 200, you were paying a massive premium over the actual price of Bitcoin. So essentially, it's kind of a Ponzi scheme, semi-scam. Weird company, but super interesting nevertheless. And it's a huge company. If you look at their holdings, on paper, it is pretty huge. I mean, they hold a lot of Bitcoin. We'll see how the situation develops. And now, time for the giveaway. Then I'm going to jump into the comments and see what you guys have to say or want me to break down. Let me just copy all of the names. So today is the 5th of February. Okay. 5th of February. We have the names. Then we jump into the wheel of names, paste, in. So let's see. Ben? Okay. Looks like Ben M is the winner. Congrats. After my segment, so in like 15 minutes, I'll send you an email with the code for the 5K one-phase DNA account. Congrats, and we will talk soon. And now time for the comment section. Zambezi iMac. So hi Marco, the form will not let me enter because they already entered a few days ago. We're working on this, so we are manually clearing the entries every few days. We're working on a more permanent fix, but for now we will have to continue with just manually clearing it for every few days. So I'm sorry about that, but we're gonna have that fixed once we find a more permanent solution. But we still have people. We still have people subscribing. If you have a second email, you can try using a second email. So that could be a sort of a temporary solution. Hello, Agent Dark. Hello, Sluggy. Welcome to the stream. What the hell is gold doing? Marco, what's good? Hello, Cycling Club. These numbers are terrible for the dollar. Which numbers? Did I miss something? I mean, the dollar seems to be catching a little bit, you know, so silver is dropping against the dollar, gold is dropping against the dollar, Aussie dollar is down against the dollar. Okay, S&P is down, NASDAQ is down. I don't really see the dollar losing much value. Let's check the numbers. What do we have today? The jolts, we had the jolts. So we had the claims as well. And I think we had something else. We had the ADP. Now, ADP, in my opinion, is not that important. NFP is much more important. But the jobs market seems to be a bit shaky. So, actual greater than forecast is good for currency, which means we missed the forecast by a lot on the ADP. Then we had the claims, which came out, I would say, a lot higher than the forecast. So more people claiming for or filing for unemployment. Then we have the jolts, which is number of job openings, right? That's lower than the forecast. And actual greater than forecast is bullish for the currency. So this should be bearish. You are correct. But to be honest, I don't really see a massive reaction on the DXY. Looks like the economy is hurting more. Yeah, silver just starting to push lower right here. starting to push lower. What do I want to say? DXY, 1 hour. We're not really getting a massive reaction. We can jump onto the edge finder. We can go to heat maps, US. What do we have? We had the claims, we had the ADP. So both came out bearish for the dollar and for the stock market as well. I think the big one should be NFP. The NFP should really tell us what's going on. If there is a massive miss, that's a problem. So yes, these numbers are important, but I'm really watching the NFP. I'm paying close attention to the NFP. Jolts came in at 6.5 million. Hi Marco, have you already done the giveaway? Yeah, so now the giveaway is finished, but usually you can expect the giveaway to be around the half time of my streams. So 15 minutes into my streams, you can expect the giveaway to happen. If you want to know when I'm streaming, because on each of my live streams, I do give away a free DNA challenge. So today I'm on at 10 a.m. Friday I'll be on at 10 a.m. And then for the next week, you will find my schedule once this populates. VIX pushing higher, more bleeding coming. Possibly. I'm short the Nikkei, and it's really unfortunate, but it's the only indice which is being resistant to the sell-off. That's good for me because I have a long setup on the Nikkei. So I would like to see outperformance. I would like to see the Nikkei continue to grind higher. The reason I think the Nikkei is catching a bit overall is because the Bank of Japan is dovish. The Prime Minister is dovish. I think there's going to be an election, or has there already been an election in Japan? And the election should turn out dovish by expectations. There's a sell America narrative. So money is starting to flow away from the United States. I mean, that seems to be the situation at least. The S&P is finally falling, at least a little bit. So that money must go somewhere, and it may be going into Japan. That's my humble bet, okay? So Nikkei, I do really like. Could it be the only one that holds this equity meltdown? I don't think so. I think if there's going to be a general meltdown in equities, it's going to spill into worldwide equities. But if there's just a small correction, small pullback on the US stock market, the reaction on the Nikkei could be minimal. Hopefully that happens. So again, whatever happens, I know this was a good position. I know there was an edge behind this position. I know that my win rate is only around 45 to 50%. I would say around 50%. So I know that half of my trades are going to be losses. Of course, the major key alert is to have your winners much bigger than your losers. 50% win rate doesn't matter if your winners are far bigger than your losses. Speaking of interest rate differentials, GBP would be pricing in the cut too, and especially if we get a softer CPI print. Euro is also following suit, not as bad as GBP. Looking for Euro Aussie, Euro NZD shorts on the weekly. Okay, interesting. I'm long NZD JPY. Can you check if the strongest currency can be tradable? USD, KWD. I personally cannot trade that. What is that even? USD, KWD, Kuwaiti dinar. Okay. Oh, damn. I think this can't be tradable. I'm not sure which broker would even allow you to trade this. This looks horrible. It's a completely niche currency pair, so I don't think you're going to be able to trade this. I joined the raffle, but DNA is not available in Australia. I'm sorry about that. I didn't know that they were unavailable in Australia. That's new for me, but yeah. Dollar Swiss. CHF. Has it found support? Not really. Dollar Swiss. If you want to know my game plan for the dollar Swiss, why do I have the 4 hour? Why do I have the 5 minute time frame there? Let's put the weekly one with the star. Yeah. So essentially, I'm looking at this level of support for dollar Swiss, which I would think should hold. So if we go down a bit more and then bounce off of this support level, I think that would be pretty high probability to look for buy setups. That's what I'm looking for. So push into it, rejection higher, or maybe just a buy limit. That would also get me positive swaps, which is nice. So I would get paid to be in this position. What do I need to understand before trading SPX indices? Currently trade GU. I would suggest joining the A1 Discord before you do anything. So, or you can watch some of Trader Nick's videos. Just type in Trader Nick explaining my trading strategy. Those videos explain everything that you need to know about Nick's approach, and I have a pretty similar approach as well. And then once you watch that, definitely join the A1 Discord and use the code Marco to get 25% off. Okay. Oracle is down 60% from the top. Really interesting. Well, maybe that announcement with ChatGPT was not the smartest thing to do. Haha, damn. This looks crazy. Should I be laughing? Yeah, this is rough. This is rough. Soybeans long went deep into profit. Trump apparently said China to buy 20 million tons. Okay, that's the whole soybean bean drama. Is NFP tomorrow or will it be delayed? It's delayed, so it's not going to happen tomorrow. It's going to happen next week on Wednesday. You can always find it on the Forex Factory calendar. Right there. See? Wednesday. There it is. Imagine telling people you trade cattle. If it makes money, there's no shame in trading it. Chad move instead of saying you trade NQ. Oracle is down 60% from the top. I've also been trading Aussie bank stocks because of the RBA tightening makes loans more expensive. That's interesting. That's a good edge. Have to admit, if you can give me a ticker, I'll be happy to take a look. It's not available for me to trade, but I think it could be nice. So this is a good edge. And it's also why if Kevin Warsh gets into office, if Kevin Warsh becomes the new Fed chairman, you could get a lot of US banks appreciating or gaining in value because Warsh is for deregulation and he wants to enable banks to lend out even more money, which is bullish for US banks. So that is also an edge. BTC bottom. I don't think this is the bottom. So I don't think we have found the bottom here. This can go a lot lower. If you want to look at some technical levels, 50, 52, 54, I think that's your first level of support. But you have to go back. You have to look at what happened in 2022. Look at this correction from peak to the trough, 77%. Let's go back to 2018. From peak to trough, where's the peak? Peak to trough, 83%. So the current pullback on BTC is nothing. The current pullback is only what, 40? 47%. We haven't even started. If this is the crypto winter, we can go to 70% like that. So I don't think the bottom is here. Once the bearish part of the halving cycle expires, I think we can start to look for buy setups, and that happens in November of 2026. That's kind of the time frame I'm looking at. Everything selling against dollar, what's wrong? Well, the dollar seems to be catching maybe a bit of a bid, but I don't know. You can't always have an explanation of why something is happening. AUD USD look good for some good returns. Yes, I do like it. Okay, so last thing for today. Let me see. Oil, not moving much. Copper, yeah, doesn't look so great. Platinum pushing lower. I think we covered most of it. So we have definitely reached the end of my segment. BTC halving cycle, it's too big for me to explain, but just go to Google Gemini, type in what is the Bitcoin halving cycle, and Google Gemini will do a much better explanation than me. It's a 4-year cycle. And it's important for Bitcoin because there's bearish and bullish parts of the cycle. That's it from me. If you want to get funded, check out DNA Funded. There's the code A1Live, gets you 25% off. A1 Live. Good luck in the markets, and I will see you tomorrow. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.